Good morning, welcome to GrainTV. Today's May 15, 2012. I'm Logan Burgess. To my right is Brock Shimano. Brock, yesterday afternoon we got the crop progress and condition report. What are we looking at here?
Looks like all three crops are going in the ground a lot quicker than we were last year and against their 5-year average. Corn is 87% planted as of Monday's report compared to 56% planted last year. Soybeans a whopping 46% planted versus 17% last year. But spring wheat continues to be the story this spring. 94% planted versus 33% planted last year. Not only did we get the crop progress report yesterday, but we also got some conditions ratings. What is the winter wheat looking like?
Yeah, Brock, well, it looks like we did pull back a little bit here in the good to excellent rating for this winter wheat crop. As you can see here, right now 60% of this crop is rated good to excellent. That's a 3% pullback from where we saw it last week. But you can see we're still well ahead of where we were in 2011 when only 32% of this crop was rated good to excellent. You know, this little pullback that we saw, 3% in the good to excellent, some people are looking at this as lending a little bit of support to this wheat market, which has really been trading lower here. And kind of adding on top of that, we had a gentleman from the Institute for Agricultural Marketing Studies out of Russia. They're experiencing a drought right now, and they're saying that this drought has already inflicted irreversible damage on a portion of their crop. So that's certainly something to keep an eye on here. You know, in 2010, when they were really in that extreme drought, we really saw the wheat market rally as a result. So it's going to be good to keep an eye on that here moving forward. What are we kind of looking at for corn planting here in comparison to 2010 and 2011?
Yeah, if you take a look at this chart here, you can see that the blue bars are actually 2010, the red bars are 2012. So you can see that over the last few weeks, we've actually caught up to that pretty quick planting pace that we had in 2010. We actually met the same percentage planted for this week, week 7 of the planting season, this week at 87% planted. So that's something to keep in mind. This probably will be the last week we're going to talk about planting progress for corn. So we're going to turn our attention to actually the emergence of that crop. And what are we looking like there?
Yeah, certainly, Brock. Well, you know, not surprisingly, we're getting this crop in early, so it's also emerging very early here. You can see the red line here is 2012. We're now over 50% emerged, and we're well ahead of both the average pace and the pace that we received in 2011. You know, the rate at which this crop is developing is going to be really important to getting that 166 bushels per acre on average that the USDA is looking for out of that May WASDE report here. So it's going to be important here. You know, next week I believe we are going to get crop conditions on this corn crop, so it's going to be important to keep an eye on that here moving forward. You know, that kind of wraps up the first half of our show here. We're about 30 seconds away from the market open. We'll come back and watch these markets trade live.
I'll have to be honest with you. First thing I'm going to mention right up front is it's free. I like this service when it's free because, you know, you can tie up a lot of money in different services, and from experience I found out that sometimes you can pay a lot of money and you may not be getting that much out of it.
Welcome back to GrainTV. The markets are open in Chicago, so let's turn over the Fire Tip trading software for the live quotes. Old crop corn is up 4 cents, new crop is up 6 3/4. Old crop beans up 8 cents, new crop up 9 cents, wheat up 12 1/4 cents in Chicago, and Kansas City wheat up 12 1/2 cents. Logan, the soybean market has kind of been the talk of the trade lately. Let's take a look at the technical landscape just to review what we're looking at.
Yeah, Brock, well, if we hop over here to a July daily chart here, this is a candlestick chart here, you can see that we're kind of resting on some technical support here right now. This yellow line is actually a support line that we drew starting off the lows that we printed back in December, back before this market really took off here during the winter. You can see that in the last two trade sessions here, we actually traded through that trend line, but we weren't able to print a close below there. You know, if we do print a close below there or trade through it with conviction, it's going to really change the landscape of this chart. You know, right now this should provide support to this contract, but if we're able to print a close below there, it kind of opens the door for a further move down. You know, it's going to be hard, though, for this contract to move lower, I think, just because the fundamentals are still strong. You know, one thing to keep in mind, though, we've been talking about it for a while, is how net long the managed money is right now. There are around 230,000 contracts net long. And, you know, in the last couple of trade sessions here, last Friday, when they were really taking those contracts off the table, this complex traded down about 50 cents on the heel of a bullish USDA report. So don't ever underestimate the power of the managed money to move this trade here moving forward. It's going to be important to keep an eye on this as we move through the day here. You know, if you got to do some work out in the fields, follow us on Twitter at GrainTV is where you can find us. We'll be tweeting about these markets as they trade live. Thanks a lot for joining us here on GrainTV for Tuesday morning. Have a great rest of your day.